Hello everyone, George DeSantis here with the look at the market for the week ending Friday, September 13th, 2020. Now I did one of these on Friday, a week ago Friday, so I didn't do one on the weekend. But let's take a look at the market this weekend. Bring up a disclaimer first, which we usually do, of course. Have to do that because it simply warns you that I'm not a licensed professional investment advisor. And so if you need to seek professional advice, please do so with someone who is qualified as such. I'm a psychologist. I do this for my own purposes. And for those of you who are first timers, it is simply a review of the market. I take a look at some individual stocks and I do it for my own purposes, as I said. And those who want to take a look at it as a YouTube video can do that. Make your own decisions. Let's begin then. We're looking at the weekly chart of the S&P 500. So here's a weekly chart of the S&P 500. I always look at the moving averages first, and you can see that the 4 exponential moving average is above the 9, still there, although it is declining. The 9 is above the 30 weighted moving average, and that's above the 50-day, 50 period, or 50 week in this case, moving average. This is the 200-day here, 200 week in this case. So moving averages are still indicating that we are in an uptrend on the weekly chart. What we had last week, well, let's go back a little further. We've had a nice uptrend all the way. Then we hit that 2 standard deviation line, that green dotted line on the weekly. And the next week we had this bearish bar here. It's just about a bearish engulfing bar. This body seems to be almost totally engulfing this one. So we'll call it that. And then we declined last week. Now last week, notice too that the parabolic went above this bar. So the parabolic is signaling the beginning of a downtrend. It's parabolic stop and reverse. So if you had an uptrend, you stop and you reverse it to a downtrend. So now parabolic is indicating a downtrend. Now, apparently, what has happened here is that the market seemed to be finding some support on the weekly chart. I drew the Fibonacci retracements from this low here, recent low in June, end of June, all the way up to this recent high. And the retracements come in at this level here. 3362 was the 38.2 Fibonacci retracement. This dotted line here. This is the 50%. These are the first few retracement levels we look for with Fibonacci. You know, so this is what we're seeing on the moving averages and the Fibonacci retracements, etc. Now, if we go down to the MACD histograms, you can see that MACD, the one we use for selling, for sell signals, 1939.9, that's begun to, that trended down a little bit last week, but no need for alarm there because this could happen without any major subsequent occurrences, you know. The other MACD histogram also looked the same, trended down a little bit. Now, Williams percentile, the 30 period that I use, is still looking pretty bullish. It's still way above that minus 50 magenta line. And if we go down to the sum of the rate of change indicator, Jerry Appel's indicator, you can see that it's still way above that 4% line. So as far as the weekly chart is concerned, except for the parabolic, everything else still looks pretty bullish. Now we can switch to, so let's switch to the daily chart. And what we see on the daily chart is, you know, because it's a shorter term period, each bar represents 1 day's data, right? For those of you who are not too familiar with technical analysis or charting. And what we notice here is that on the daily chart, we hit the 2 standard deviation line. In fact, we went above it, significantly above it. and the parabolic switched the next day. That was Thursday, I believe. Uh, and then we had the previous week, and then we had this other day here on Friday. We came down here after the holiday on Tuesday and did this, right? And that's Wednesday, Thursday, Friday. So what we had was this pullback here with the 4 crossing below the 9. And the same thing happened on some of these stocks that I own. So, I have to be disciplined. I learned over the years you better have some discipline, otherwise you can lose your shirt. Um, so I sold. I had to sell some of my stocks, but then I was able to buy them back, or I bought back a few. Still not too confident that we're gonna see clear skies from here. However, let's take a further look at the daily chart. On the daily chart, we have now 4 below the 9, and 9 is below the 30 as well. See the 9 cross below the 30 here. So this here is a very significant area, is a trading range. It is between the 50-day moving average. That magenta line is the 50-day moving average, and this is the 30 weighted moving average. So we are getting a significant trading range sort of here. And you notice that we had a bearish engulfing candle on Thursday, and then on Friday we seem to have found some support at the 50-day moving average. So on Friday we had this doji candlestick here, indicating that perhaps we might find some support here. We'll take a closer look at this sort of thing as we go along, but we're not out of the woods. I mean, this thing could go even lower, let's face it. The parabolic is still above the most recent bar, and you can see that this is what is happening here. So let's look then at the before we leave this, notice that we were finding that every 10 trading days we seem to have hit a bottom, cycling at a bottom, every 10 trading days, not so pronounced here, but here this is the 10th one. From this low here, we get the 10th one here. We don't know if that's holding, if that will hold, but just want to mention it. Now, if we looked at the MACD histogram, certainly we got a sell signal here from the MACD histogram, the 1939.9. So this is where we got that sell signal right here. Remember I mentioned a couple of weeks ago that even though it wasn't so pronounced, it was just a faint, you could hardly see the histogram bar, but it was red and it was a sell signal. And that's when this happened here. Since then, we've trended down. Same thing for the default setting, the 1226.9. We've trended down. And what I'm looking for, as I said to you in an email, is I'm looking for the histogram to start shortening up here. So if we get a histogram that is shorter at this level, I'll begin to feel more confident that perhaps this downtrend is coming to an end. On yesterday, on Friday, I think it was, I decided, you know what? I wonder if this 50-day moving average here is really going to hold as support. So let's drill down to an hourly chart. Where's the hourly chart? So when I drill down to an hourly chart, okay, here's what I found. On the hourly chart, back here we made a low and MACD made a low. Let's look at both. Either one of them. It's the same thing. We made a new low. Now, the market rallied up on the hourly chart, found resistance at the 50-day moving average, 50 hour in this case, 50 period, and then turned around and moved down again. But when it made this low, MACD made a higher low. So you have what is called a classic bullish divergence on the hourly chart. This here is a classic divergence on the hourly chart. And you're seeing the same thing here on the other MACD with the default setting. I also noticed that on the Jerry Appel's sum of the rate of change indicator, we also have a divergence. So I'm just pointing that out because I'm wondering if the 50-day moving average is going to hold as support, and maybe we get some green shoots again. So let's move on. Minor correction before we move on. I miscounted. This bar is a 10th bar from this low here. So that's just a minor correction. So here are some charts from Barron's. This is from their market laboratory, as they call it. Um, this is the Dow Jones Industrials, okay? And this is the Dow Jones Transportation Average. Um, I like to look at this because it tells me whether transports are confirming the high of the industrials, and if, in other words, if Dow theory is indicating that we have an uptrend or what, because transports are confirming. But right now you can see that it was confirming here, but as the Dow pulled back, transports are remaining pretty bullish. I mean, it hasn't pulled back. To me, it seems it hasn't pulled back as much. And the transports are usually very important because that's what moves the goods. and so anyway, I just wanted to point that out. Now, euphoria was very high for some time now, and it's leveled off a little. But it was this euphoric state here that was consistent with the drop that we had in March in the recent pullback. Okay. If we look at these other charts, we have here the TED spread, which doesn't mean a hell of a lot to you, but you can see that that we had this spike here just when the market started to pull back. We are now at a low level. We had 0.14. The insider transaction ratio, it was pretty bearish up until this time here a couple of days ago, and now it's neutral. And the put call ratio relative to the S&P 100, you can see that that's indicating that we are still likely to see some uptrend here. In other words, to be bullish, the put call ratio should be a 60%, and now it's now at 45. Where is it? 45.50 or so, pretty close to 60. And the S&P 100 is at 125. It's bullish, and you can see that it moved above that. So I just wanted to show these charts to you. I don't know if you make any sense out of it, but they're indicating that a number of mixed signals anyway. So with a few minutes we have left, let's take a look at a few things on Shaken Analytics. First thing I would say we might look at is the SPY, the S&P ETF, the ETF of the S&P. You can see how overbought it was here, and we got that pullback, and now we're oversold, and we are just at the bottom of that channel line here. So we're below the 21-day average, but we're now oversold. So if that's any reason to get excited, I don't know. We have a lot to worry about still. Next, we can take a look at the Qs, which is, it's actually the QQQ, but this is the Direction one, the triple leverage. Notice again, just as we saw on the SPY, it was very overbought. Now it pulled back. Now it's oversold. So maybe, since the market is looking oversold here, and we're seeing some support, possible support at the 50-day moving average, and we're seeing that bullish divergence on the hourly chart, just maybe we might get a bit of a rally here. Don't quote me, but I'm thinking that's what we might get. Okay, here's a chart of XLK, which is the technology sector, overbought, very overbought here, pull back, now oversold. Same story, right? So let's see what happens. Folks, we don't have much time left, so I'm going to call this a day, and we'll try and do this again next week. Happy trading. Let's see if we get a rally from here.